Well, with the continued unrest in Syria, as well as the potential for intervention by the United States and other Western forces, oil prices are on the rise again, with some suggesting they could spike as much as $150 per barrel. To discuss this, we are now joined by Scott Bauer, a market strategist with Trading Advantage, and he comes to us from the CME in Chicago. Great to have you with us. Thanks so much for joining, Scott.
Thanks for having me.
Let's get right into it in terms of what you're seeing as it relates to Syria, what the expectations are in terms of the outcome here, and what it is, in fact, doing to the price of oil today.
Well, you know, like you had said, earlier today we saw oil actually rise up to the highest it's been in two.
Okay. I think we have just lost the audio on that front. Hopefully we'll be able to bring Scott Bauer back because, as mentioned, WTI, the energy sector, very, very much in focus on the back of the Syrian tensions that continue to escalate. We did have an options trader on yesterday suggesting that the options market is basically telling us perhaps that there will be something in terms of some type of action from the U.S. as well as allies by the end of this week. So you certainly are seeing the spike up in WTI as well as some of the stocks as well. Let's take a quick look at the market as well. We're going to take a look here at the price of oil, up 0.95% right now, 110. Keep in mind it did reach 112 yesterday, and we're continuing to see some strength here as well. Let's take a quick look here at the Canadian markets. The TSX is up by 0.52% right now, so certainly reversing yesterday's declines, and that is the intraday, again, gaining a little bit of strength throughout the day. We also want to keep our eyes on the most influentials, and on that front, on the Canadian space, we're looking at materials, financials, as well as energy. A little bit of a mixed picture. Materials, interestingly, getting a little bit of a rebound today. It certainly has been on the decline. Energy also, as mentioned, continuing to move up, impacting the TSX to the upside. Financials pulling back ever so slightly. In terms of some company-specific and stock news, take a look here at the shares of Bombardier as well as National Bank. Bombardier's stock price certainly has been given a bit of a boost as this company strengthens its position in Russia. And then again, we continue to follow these bank earnings for you, and on that front, we did see National Bank also ticking higher a little bit today, 2.2% after the company beat profit expectations. And we want to head right back now to Scott Bauer. I think we've got the audio fixed. Scott, let's take off where we last left off in terms of your take here on the energy markets in Syria.
Yeah, you know, obviously that's on the forefront, and it's not so much the concern of the oil output from Syria as what that unrest may do to the rest of the Middle East. I mean, the Middle East counts for about a third of all world U.S. oil production. So, again, it's not really the output from Syria. That being said, you know, we saw a huge spike up earlier this morning. West Texas traded the highest it's traded in 2.5, 3 years, up about that 112.5, but, you know, settled down somewhat. And then we saw a glut, actually, of inventories, of U.S. oil inventories. So that's kind of pressuring oil to the downside as well. But in the short run here, especially with all the rhetoric coming out of Washington about, you know, an imminent missile attack, this, that, and the other, that's definitely going to keep these oil prices elevated. You had mentioned earlier, you know, some strategists seeing maybe 150 as a target. I don't really see that. I do see maybe the next level coming in at the 120 to 125. And I think what's going to be important is if we do have some sort of military intervention, it's not going to be the spike that we will see initially. It's going to be what happens in the day or two or the week afterwards. That's going to be the telltale sign in the oil sector to see if we get a continued further upward movement or if we settle back in.
Well, Scott, you trade the options, oil options as well as gold options. When you talk to your colleagues, you hear the chatter on the floor there. You're seeing these trades being put on. What do you think the market is telling us? What are your colleagues telling us in terms of what their expectations are in terms of the outcome of this scenario?
Well, there's certainly a big upside play, both in USO and then if you want to talk about gold in the GLD as well. There's the bias is definitely to the upside. Volatility is definitely to the upside. So I think that's actually a factor of two things. It's obviously Syria and any sort of military intervention, but it's also, you know, the Fed tapering issue, which is not out of the woods yet. There's still some question whether that's happening September, October. If it happens sooner rather than later, you know, that probably pushes the price price of gold for sure up a bit. But given all this uncertainty, I would expect going into the weekend, we're going to see more volume, more volatility, and higher prices.
Let me ask you this, though, as well, because as you look at the price of WTI as an example, talking about the upside, you're saying essentially what I'm hearing from you is that the trades are piling on, that the price is going higher. But at what point is that price kind of capped out because there's demand destruction that comes into play?
Yeah, it looks to me like right around that 120 number like I was talking about. And certainly that's a big move from here, right? We're looking at another 7 to 8% move from here. That's a big number. But that's what, the oil traders are telling me, that if something imminent happens, that's really where we're going to spike to.
Scott, do you think that there's a disconnect going on in the marketplace today in the sense that you've got oil, to your point, on the options side continuing to look that it's going to be moving higher, but at the same time you've got these U.S. and Canadian equity markets that are also moving higher? So you almost have to ask, is the equity market just rebounding from yesterday's decline, and or is it telling us something that we should be paying attention to, that perhaps it's not, that risk is okay to come back on here?
I don't know if it's so much risk is coming back on as it is, not just yesterday's decline, but the whole August pullback. People in the marketplace that are on the sidelines, and it's a record amount of cash still on the sidelines, have been looking for that 2, 3, 4% area to get back into the marketplace. In fact, with all of the outflows that we've seen over the last few months from all these bond funds, that money is still on the sidelines. And I think people are just, they're picking and choosing. It certainly is a disconnect. You typically don't see the S&P market and the overall market move hand in hand with commodities in the oil space. But I think that's what's going on right now, is people are really just looking for any area to get that investment in. And even though there's this risk, there's a big geopolitical risk, and maybe there's another 2-3% downside to the marketplace, I think people want to tier themselves back in. And again, there's so much money on the sidelines, so much pressure on the sidelines to keep the market elevated. I think that's what you're seeing.
Scott, let me ask as well, as relates to gold, I think the price movement higher in gold certainly caught a lot of people by surprise. What are you seeing in terms of market activity right now? How much interest is there?
There's a lot of interest. And let me tell you, if there's some sort of military intervention, 1475 or so is probably the next price that you see in gold. That could be the next spike. Now, that being said, if things calm down, if we get more news on tapering, which actually I think, in the long run, that's actually the bigger issue, not Syria, but that's in the long run, then I think you see gold settle back down into the 1,300 number. What's really, kind of impressive to look at, though, I look at gold and silver together. I look at the ratio. And over time, historically, the ratio comes in, around 50 to 1, maybe even lower than 50 to 1. Well, gold on this rally up is now trading about 58 to 59 to 1 over silver, meaning, yes, both commodities have increased in value, but gold has really accelerated at a far quicker pace than silver has. So historically speaking, that tells you that gold may be overpriced, not just as, on its own, overpriced in comparison to silver. So when I look at those option markets especially, and the GLD ETF and the SLV ETF are wonderful markets to trade in because they're so liquid, I am actually looking at positioning where I'm looking to buy some silver and sell some gold in those ETFs, just based on where this historical ratio really is coming from.
Scott, you referenced the GLD as being a very liquid way to play gold. What about silver? What's the ETF that you use on that front for our viewers?
Right, that's the SLV. So when I'm looking at, the equality between the two, it's GLD versus SLV. So if you look at the futures market, that's the ratio I'm talking about, that is about 58 or 59 to 1, with gold trading 14.10, silver around that 23.5 level. The same really holds for the ETFs as well. So if you believe in that theory, and if you believe in historical technicals to those charts, then the GLD would be overpriced compared to SLV.
All right, Scott, we will leave it there, and we'll keep our eyes on the SLV.
Great. Thank you so much.
Thank you. That was Scott Bauer, Senior Market Strategist at Trading Advantage, coming to us from Chicago.